Hey traders, welcome to Charts and Coffee. Happy Tuesday morning, everybody. Before we get started, just a couple things on the schedule. First of all, we do have, I'm going to bring up the economic calendar here. So these are things that we need to be aware of. I've got them in the notes as well. Today is day one of Jerome Powell's, moving the camera, that's all I wanted to do. There we go. Today is day one of Jerome Powell's testimony. And it's used to be called Humphrey Hawkins. I don't know if they renamed it. But at 10 a.m., you'll see here due to testify about semi-annual monetary policy. So today is the Senate Banking Committee. And then day two, you can see here, is the House Financial Services Committee. Day one is the big day because it's a lot like the FOMC press conference where there's a lot of Q&A. And obviously this time it's going to be senators. Tomorrow it's going to be the Congress. But it has the ability to move the market for a prolonged period of time because they're going to ask some questions starting at 10, probably to lunchtime. So 10 Eastern. And treat it like an elongated press conference on the day the FOMC makes a decision about rates. Now, what do we want to do with this? Well, I do have two positions going into this event. One is a very established long-term, well, not honestly long-term, but it's a daily time frame setup on the GLD options call where we're already at T2. We've already tightened up the stop. And now we're just doing our best to not smother the trade and frankly, the trend and ride this into one of two expirations. Some of our members in the Sector Secrets Mastery have the February 14 GLD 252 calls, and some of our members in the Sector Secrets Mastery have the February 21 expiring 252 calls. So clearly, when you look at where we are in GLD, these are very deep in the money at this point as we're trading up at 268. And so we're looking to just take this to the third target, which is going to be typically either one of two T's. Either we hit the tightened or trailing stop, or we hit time. So that last target is that third, one of the two T's. Now, if you're thinking to yourself, Rog, I don't trade to have multiple targets. Remember, the process of scaling in and scaling out, which is predetermining at what levels you're willing to be a buyer, in this case of the 252 call, and at what levels you're going to proactively look to scale out. So that means you know what the levels are beforehand. You know what the levels are before they get there, so you can respond to either buying more contracts or scaling out and paying yourself. At this point, unless Jerome triggers a lot of volatility, it's just a matter of not smothering a trend. In other words, not trailing or tightening a stop so close that the normal ebb and flow of that GC futures contract gets tagged out and then continues on its merry way. That's one of the things a lot of trend followers struggle with. How tightly should I trail or tighten a stop? And if you've got a tool like a volatility indicator, it makes it really easy because now you know the higher probability of what that symbol is capable of doing. And if you're tightening a stop with the ambition that you want to give it enough sort of yard to run around in, but if it starts to get a little too carried away, you do want to close the trade at a profit. Having volatility zones and then putting your stop just outside of that is really powerful. All right. So whether you're looking at XLF now, one of the questions a lot of our members had, and there's a lot of ways to do this, presuming, let's all embrace the reality of nobody knows what's going to happen tomorrow. Well, except for all those geniuses on television. All of them know what's going to happen. But mere mortals like myself, what we have to do in the real world of trading and not trading entertainment is that we have to ask ourselves, what is the risk of the trade? What are the obstacles in the way of the continuation of the trend? And what are the events that could add volatility? Those are three really easy things to determine beforehand, right? Now, I'm not going to be able to account for all the uncertainties around volatility because clearly Not everything is going to be on a schedule. Jerome's on a schedule at 10, but at some point we're going to hear from the president as well. I don't think there's a time yet set to that. So there's going to be the uncertainties of when certain events happen, when certain events end, right? And then also the geopolitics of different things that are happening, like tariffs and retaliatory tariffs. That's okay. Part of trading is embracing uncertainty, right? And if any of you have read any of Annie Duke's books, and I highly recommend all of them. If you've never read them, part of Annie, and she talks about poker, and she now advises a lot of hedge funds, from what I understand. She's a brilliant woman who has a legit poker history, and she understands financial markets as well. And she says, look, you and I, traders, we're always going to be making decisions with incomplete data. That's the game. Right. So we're always not thinking about certainty. We're thinking about probability. What are the things that if in place, increase probability? One of the reasons that I went with XLF over, say, Berkshire, JP Morgan, Visa, MasterCard, Bank of America, Wells Fargo, Morgan, and SPGI, notice those are specifically, in this case, right? These are the 9 stocks that are in uptrends, right? And then you've got XLF. If I have this many high concentration weighted names, the top 7 names that are weighted in this sector are all moving higher. So this is one way to get a lot of bang for your buck. Sure, you could pick one of those 7, and any one of them would be fine. Probably my 2 favorites yesterday were, if Visa were to pull back, it didn't, and Bank of America. Bank of America was my other favorite. I went with XLF. Now, the financial space, if it's a rising tide, most of these should benefit. The ones that I would not expect to necessarily benefit in the same way would be things that don't have a trend, right? So American Express, AXPC, BLK, BX, PGR. I'm going to leave those off the list. There's nothing wrong with them. But when we think about what we trade is more important than how we trade. So if we think about what we trade within this group, wouldn't I want something that has the most probability of continuing? And that's where our indicators are so important. If we've never thought about, what roles do my indicators play in this job of taking something where I couldn't possibly know everything, but giving me enough information to make a confident decision? And that's where I rely on these tools at this point, after all the testing that we've done, without question. So Jas, BAC is absolutely something we could have done. I just went with the tide instead of a boat, but that's a great choice. In fact, Jas, that was my number 2 choice. I could have done both, but that was my number 2 choice in terms of the 2 setups in that space. So thanks for the question. All right, Christoph asks, good rising. I've never heard that before. I like that. Good rising. Grand rising, not just good, grand. So Christoph asks, I've been watching along for a while. Thank you. I want to say thank you for all the information you've been sharing. I've learned so much about identifying. Okay, that's great. Trends, right, Christoph? Trends. Can I please touch on Palantir? So I don't follow fundamentals, Christoph. So the next question is, and thank you, Christoph. Thank you for your time. I don't use fundamentals. I want to know when earnings are. I don't care what earnings are. When, not what. I don't know day to day, moment to moment what the news is, right? So I'm going to believe that all the things that are known, fundamentals, news, rumors, whatever's known and believed about a stock is built into price. And I do believe that's probably the mantra of any chartist. Chartist meaning not a technician, somebody who uses charts to make decisions. We presume the things that we don't know are going to basically outnumber, maybe 2 to 1, maybe 10 to 1, the things that we do know. But what is going to level the playing field is a series of, well, for me, automated indicators that say this is the trend, this is the momentum, these are the support levels, these are the resistance levels, etc. Palantir is in fuego, right? It's back to its uptrending ways. This little dip here, I believe, were some downgrades, some brokerage downgrades. It kind of, obviously added a little bit of unnecessary volatility. And since earnings, Palantir is back to its bullish ways. Buy the dip, my friend. Yeah, I will stick with what we've been saying in the mastery, which is buy the dip. Now, what's a dip? A dip is find, say, the last major move, find a support level, find a major psychological level like 100. And when price comes back down to revisit that level, scoop that stock up or call options in that stock. But I definitely would get back on the uptrending list of strategies that you might have. Find the one that works for a situation like this. I like 100. I think anywhere between about 100 and 99 would be a very interesting place to take advantage of a pullback. I will not buy into new highs. But if you've been watching this show for a while, Christoph, again, thanks. You know, all right, Rob's going to say, I got to wait for a pullback. Yes? Okay, awesome. All right, next up. Oh, by the way, tomorrow at 2 p.m., I've never done one of these before. So it'd be really great for y'all to tell me what you think of this time. We usually do webinars at 8 p.m. and which is cool, you know, but at the end of the day, it's evening time. A lot of people are unwinding. And I've been doing webinars like that for the better part of, 13 years. But we're going to do a webinar tomorrow at 2 p.m. Eastern. So I'll be curious what y'all think. Hopefully everyone can make it. Of course, there is going to be a replay. You can register at simplertrading.com/consistency, but it will be kind of neat, you know, from my perspective. It will be kind of neat to have this discussion about consistency in your trading. What tools are you using so that you can add consistency and confidence to your trading? What can be done in an environment like this? You know, 2025's off to a very interesting start. And we're going to tackle what those key characteristics are over time, right? Over time that lead to account growth. What are the types of trades? What are the types of tools? And we'll get into a lot of tips and strategies on, you know, what we're already doing so far this year. So looking forward to seeing y'all there. You can register at simplertrading.com/consistency. And that's going to be a 2 o'clock webinar. First time I've ever done that. All right. So that would be a pullback buy. I like that 99 area. What's interesting is because of the earnings gap, I would be here's another thing you can do. Right? Here's something else that I would recommend to do if you are looking at something like PLTR and looking at this big old gap. One thing you can do is look back. You can look back about a quarter. So if you want to go to October, it's not really a quarter, but if you want to look back to October, or if you want to look back, you know, February to February, right? What you could do here is look at PLTR and make an assessment about the where the volume is in this stock. Where is the volume? Where is the size? Where is the, you know, where are people where have they dug their heels in and said, hey, this is where I'm building a position, right? And so along the right edge of this chart, depending on how much data I include, you'll see that there is this kind of a histogram, a vertical histogram. And what I'm looking at is where is the size? If I anchor this to, say, June, beginning of June, $74, $75. I don't know if we're going to head back down there again. There's a little bit more size, see here along this edge, actually closer to 101, 102, not even 100. There's some volume there. If you want to know where people have decided they want to get in or get out, where there's a tension, where there's commitment, that price-based volume, you can also do this in a different way with an anchored VWAP. But that price-based volume is going to tell you a lot about participation. It's going to tell you a lot about attention. That's another thing you can do with PLTR. So if I were doing that, let me pick one of my own positions apart. All right, let's do this. Let's do this with gold. So I could do that here. Gold's a position that I would highly recommend folks keep an eye on. We've been in this one for quite some time. I'm trying to think what the original date of the alert was, but it's been a bit. Like I said, we've scaled out twice already. Our cost basis for gold calls was $4. And I'm trying to get my drawing tools here, $4.16. And last I checked, these were trading just shy of $16. So on the move lower, right, the dip, as I like to say, we picked this up for $416. We hit a T1. We've hit a T2. We kind of like a safety net, tighten up the stop. And now I'm waiting on T3. And right now, like I said, we're trading at around $16. We have anywhere from, basically including today, right? Tuesday, Wednesday, Thursday, Friday. So I got about 4 days to expiration, or I've got 4 plus another week, 11 days to expiration. So that T3 is kind of what's next in mind. Now, if we pull back again, yeah, I need to be vigilant about watching for pullbacks on GC futures and then buying those GLD calls. So if you're wondering, hey, Rob, yeah, do you trade futures? Yeah, there's 2 ways we can utilize futures: trade gold or trade GLD. You can trade options on gold futures. You can trade options on GLD. And so there's a lot of ways you can start to add futures in a gradual, frankly, lower risk way by trading something that's less expensive and less volatile. If we're going to quantify risk as cost, initial margin, or cost per contract, and the volatility times the dollars per point, that's when I say safer, relatively speaking. It's a car with a slower motor, right? We're less likely to get into trouble. But GDX would be on that list as well, by the way, gang. So if you haven't taken a look at GDX, that's something else that I would highly recommend. And looking at GDX individual stocks, Newmont Mining is another outperformer. All right, what else do we have here? As far as questions go, thank you for the question on PL. That's one other thing that Josh mentioned about BAC and this idea of a run into earnings. Earnings on Bank of America are going to be mid-April, right? So mid-April means if I'm looking at a 642 window, that 642 starts 6 weeks before April 15, I think. So it's 6 weeks before that. So presume the first week of March, first day of March. So in basically 2 weeks, we start thinking about that run. So I'll start that list. To your point about the run into earnings, just the swing trade that's in many ways fueled by the anticipation of what earnings will bring. If I can find an uptrend 6 weeks out before earnings, that would definitely get on that watch list of that, as you mentioned, that run into earnings or rally into earnings. And there probably will be quite a few individual stocks from the list that I showed you on the XLF that are in uptrends and are closing in on their earnings date. We're probably, obviously about 8 weeks out right now. It's not too early, but remember, if we start playing these things 8 weeks out, then there's a lot of dollars associated with that position because of the time to expiration. So the sweet spot for me in terms of still getting enough time to take advantage of that rally into earnings, but not paying so much for the option because of the time to expiration, is about 6 to 4 weeks. It's a really good sweet spot for that. All right, gang. So if you haven't already registered, and again, I'm looking forward to seeing how folks like the 2 p.m. start time. We're going to be having the webinar tomorrow at 2. And then if you want more information about what we're about to embark on in the Sector Secrets Mastery, check out my.simplertrading.com/immersion. We are starting, in fact, the first time ever. Don't know if we're going to do something like this again, but instead of having a 4-hour class, we're going to do a 3-month immersion. So instead of sort of drinking from the fire hose and then you're sort of off on your own with that information, right? But you're off on your own for the next however long. Every single week, we're going to cover a number of topics. Every week we're going to cover a topic, so we can cover a huge number of topics in nice bite-sized chunks for the next 12 weeks. If you want that list of, okay, Rog, I'm interested. What are you going to cover? Are these things that are going to make me a better trader? These are things that are going to make you a more consistently profitable trader. That's all that we want. Consistently profitable trading. And I can say that because A, I've been doing this for 35 years. B, I've never blown up an account. And C, when in the room, I share the kind of trades that I would be taking if I was sitting in a room alone. I just happen to have the great fortune of sitting with a group of awesome, like-minded people. So this is the first time we've ever done this. And I don't know if we're going to do it again. I'm really interested how this is going to go. But if I had a choice of learning something over the course of 3 months or 1 day, I'd take having a mentor by my side for those 90 days. So I'm really looking forward to doing this all with you. I'll see you tomorrow. We'll have examples, brand new examples in this webinar. I was looking at the slide deck, day trades, S&P, SPX, SPY, as well as more swing trade examples, and sector index sector stock, and how do you choose expiration dates, things like that. So pretty stoked, gang. As always, thanks so much, and I'll see you tomorrow, same time, same station. Then I'll see you at 2 p.m. tomorrow as well. All right, gang. Until then.